And while we're talking about record prices, we've been showing you the ongoing record gold price and Bitcoin price in recent weeks, because neither of these assets really is driven by the cash they generate, rather by buyer sentiment, which can be driven by a defence strategy and other times a hedge against potentially rising inflation. So the gold and cryptocurrency have similar qualities. Well, somebody's put their mind to this. Is the Chief Investment Officer at JBWere, Sally Auld, who joins me now. Sally, thanks for your time as always. Let's go to that first point that we're talking to Craig James about. The economy's slowing, the stock market's at record highs. Technically, if the economy's slowing, don't companies make less money?
That's how it's meant to work. So, profit margins come under pressure. Firms respond to that by adjusting the thing that's usually the biggest cost item for them, which is headcount or their labour force. So unemployment rate starts to go up, aggregate demand slows, and hence, yes, you would expect that in a slowing economy, profits at some point will come under pressure.
Okay, so as a Chief Investment Officer, are you worried that investors do get ahead of themselves when you see these markets at record levels?
That's right, yeah. So I think we feel like, given the economic backdrop, where we've got slowing growth in most economies as the forecast for this year, markets, many of them sitting at record highs, quite expensive valuations. It's something that just feels a little bit at odds at the moment. And so we've been reasonably cautious and I guess telling our clients just not to sort of really get too caught up in all of this and remember where we are in the economic cycle, which is more towards the end than the beginning. And that's typically not the point in the cycle where you want to start getting overly excited about adding more risk to your portfolio.
Okay, so record house prices, a record stock market, record gold prices and record prices for Bitcoin. Let's take those last two. Do they make any sense to you at this stage of the economic cycle?
So gold we've been a big advocate for the last sort of year or two. We think that plays a really important role in portfolios as a diversification play. It tends to be something that doesn't just move up and down with the economic cycle or the market cycle.
Okay, quick question there. Gold shares or gold bullion?
Gold bullion.
Why is that?
Because it's the pure play exposure. So if we buy gold shares, then we've also got to worry about, have we picked the right company? Do we believe in the management team, et cetera, et cetera? Whereas if we just buy gold, you don't have to physically own it. You can buy an ETF. You really are just owning...
And a large or small proportion of a total portfolio?
So interestingly, the analysis that we've done shows that over time, the optimal level of gold that you should have held in your portfolio is somewhere between 5 to 10%. Now, I would say most of our clients don't hold anywhere near that much, probably closer to 2 to 3%. But the fact that the gold price has risen, the Aussie dollar's fallen, has made that a pretty attractive part of their portfolios.
Okay, so they talk about it as a hedge against inflation. Is that the same reason in your analysis that Bitcoin is rising to record prices as well? That there's a scarcity of it, so people are sitting there and saying if inflation is high, there's a scarcity of those types of assets, we will buy that.
So it's really hard to know with Bitcoin because it hasn't been around that long. So I think the answer to that is we don't know. What we do know, however, is that earlier this year, in January, the big regulator of financial markets in the US, the SEC, came out and basically said, we're actually going to give the okay to ETFs in Bitcoin. And so some of the big ETF providers...
BlackRock.
Correct, jumped on top of that. And that's meant for a lot of investors, there's now a much easier way to access Bitcoin. And so I think that's been part of what's driven the rise in Bitcoin, which is that for a lot of investors, they now don't have to do it on a sort of crypto exchange. They can do it in a mainstream sort of way through an ETF. So that's been one driver. And
also, just to pick that up, that ETF has to actually at some stage buy the physical Bitcoin.
Correct.
So that creates demand for those coins, right?
Yeah. There's also, what's known in that world as a Bitcoin halving event coming up in April, and that's where the rate of production of Bitcoin reduces. And so that sort of adds to this perception of scarcity for that, which often pushes prices up. And I think also this perception that maybe interest rates have peaked for the cycle and are coming down at some point also means that the opportunity cost of holding things like gold and Bitcoin is lower now. So when rates are high and going up, then we know that we're foregoing income. We could buy a bond, we could put our money on term deposit. When rates are coming down, that cost isn't as large, and so people might be a bit more happy to buy those two things.
Okay, so when you go back in hindsight, will you do the same analysis on, say, cryptocurrencies and Bitcoin as you have done on gold to look back in hindsight and say, well, maybe optimally you should have held between 2 and 5% of your portfolio in Bitcoin?
So two things with Bitcoin. One is that in its short history, it's really highly correlated with basically equity markets, so particularly the NASDAQ. So when the NASDAQ's going up, Bitcoin rallies. When the NASDAQ's coming off, Bitcoin collapses. And so it actually trades like a growth asset. So I guess the question you have to ask yourself is, you can add it to your portfolio, but what diversification benefit do you get if it's just going to move in line with equity markets? The other thing is that it runs anywhere from 4 to 5 times the realised volatility relative to gold. So if you're going to hold sort of 4 to 5% of your portfolio in gold, because Bitcoin's 4 to 5 times as volatile, you probably only want to hold 1%.
There you go. I'll tell you what, Sally Auld, always great to have you in the program. Many thanks for your time today.
Pleasure.